Hi, good morning, everyone. My name is Brad Pragnell. I'm going to be your webinar presenter and host today. It is currently 6:30 a.m. here in Ottawa, Canada, where I am currently located, and we are presenting a DFS Observatory webinar on payment systems and digital financial services. This presentation is offered as a part of the DFS Observatory offering. I'll talk a little bit more about DFS Observatory. There's a lot of great information available on their website, and they're become very active in terms of being a great source for information about digital financial services for stakeholders and for policymakers in various geographies. Just going to talk a little bit about the structure of the webinar, going to do a little bit of an introduction about the DFS Observatory, and then we'll get right into it. We've got this timed for about 1 hour, about 45 minutes of presentations, and then about 10 to 15 minutes at the end for a wrap-up and for a Q&A session. So just briefly, the webinar will be ongoing, and we'll be looking at the Q&A session at the end of the webinar. I'll just sort of click through here. Here we go. So as I said, 1 hour webinar. We are looking at dealing really with some key concepts and key definitions here associated with payment systems. So the focus really of today is really going to be on some level setting, defining some really key concepts, key definitions associated with traditional payment systems. So for those of you who are experienced in payment systems, a lot of this will probably be stuff you've already heard, but I think one of the challenges in dealing with payment systems, sort of traditional core, sort of bank-based payment systems, is that there's a lot of terminology that ends up being a little bit fuzzy. So I've tried to go back to some of the original sources, the better sources, organizations like the Bank for International Settlements, which does give us, a good way of sort of grounding a lot of these discussions. And then hopefully some of the terms and concepts that I use today will help ground some of the later webinars that DFS Observatory is putting on. An important thing to talk about is that there is going to be a quiz at the end once we're wrapping up the webinar. And upon completing this quiz, if you do 6 of the webinar quizzes and you get at least 60%, then you do receive a certificate of attendance. One of the things that you need to keep in mind, though, if you're doing the quiz is not really that hard. Like, the questions are reasonably straightforward, but you will not have access to the slides. So you are going to have to pay attention over the next 45 minutes or so. You don't have to take voluminous notes, but you are going to have to pay attention. So, and the link will be sent around. I'll mention this again at the end. The link will be sent around by email. You'll have about an hour, I think 2 to 3 hours to do the quiz after the webinar, and then that link doesn't work anymore. You will get an immediate grade. And one of the things to look for if you are doing the quiz that you need to be careful of is that in case the email goes to your spam folder. So for some of you, if you don't get that email, just have a quick look at your spam folder. So that's basically it. Just briefly, we're going to keep the room reasonably quiet for most of the presentation. For those of you on WebEx, there's a little hand icon. You can use that hand icon to indicate that you do have a question. There's also a chat function as well too. So I'm going to try to sort of get through this material over the next sort of 40 minutes so that we can have a little bit of a discussion at the end. So hopefully that sort of deals with some of the basics of how the webinar is going to be structured. So thank you very much for attending. As I said, I'm currently in Ottawa, Canada. It's 6:30 a.m. And for those of you in other geographies, hopefully it's not a particularly bad time for you. So I'll just sort of work through a few things about DFS now. So There's a lot of good material at the DFS Observatory website. There's the web address there, dfsobservatory.com. They're located at Columbia University in New York, and they're providing a lot of really good material that I would definitely suggest that you dive into if you get the opportunity. So they've maintained, they're developing a legal and regulatory database on digital financial services. They have model laws and regulations. They're doing webinars and roundtables. So this is part of the webinar series that DFS Observatory is providing, and they've got some great topics coming up on anti-money laundering, level 1, the people from the Gates Foundation, and blockchain. So some really good topics. As I said, this one's a bit more of a level set, kind of an introduction on some of the concepts, really focusing on kind of core payment system issues. The upcoming annual DFS and Emerging Payment Summit in New York on the 8th and 9th of June, I would highly recommend. They have a very impressive lineup. I'm fortunate enough to be joining them on one of the panels, but they've got some very good presenters, people like Jason Lamb from Gates Foundation and Sean Rodriguez from the Chicago Fed, and a lot of people from various payment system providers, thought leaders like Chris Skinner. So it's a great event, and I would highly recommend attending if you're able to make it to New York in early June. They also are providing commentaries and their own analysis on developments, and they are trying to promote collaboration. So it's a great initiative, the DFS Observatory, and I think if you are in this digital financial services area, be it core sort of payments, be it mobile money, be it blockchain, I think there's a lot of good resources for you to make access to. There we go. So as I mentioned on their website, there's a number of their upcoming events. So definitely stuff for you to dive into over the coming months. It's a pretty good agenda, I would say, of upcoming webinars. And as I mentioned, if you do 6 of the webinars and 6 of the quizzes, then you have an opportunity to get the certificate of attendance, which I believe looks like that. So definitely worth paying attention, doing the quiz at the end, and there you go. You get a certificate of attendance from Columbia Business School. So there you go. My mother always wanted me to make it to the Ivy League, and there I go. I finally have. So okay. So now we'll move into the core of the presentation. A little bit about me. There's a slightly older photo of me, very tiny photo. So a little bit of background about me. So I've been in the payment space for about 10 years now. My background is financial services policy generally. I'm currently based in, or splitting my time between Ottawa, Canada and Sydney, Australia. And I'm currently consulting with Payments Canada on their modernization initiative. So Canada, like many other countries, is going through a process of modernizing its payment system. Happy to answer some questions about that, but please note that anything that I say today is they're my personal views and do not necessarily represent the views of Payments Canada. In my previous role, for 8 years, I was the head of policy at the Australian Payments Clearing Association, and was very much involved in the development of the new payments platform, which is the new fast payment system in Australia that'll be starting up in October of this year. There's my formal qualifications. And my current areas of interest are payments modernization, but particularly national payment strategies. So for me, DFS Observatory is a great resource as well in terms of how central banks or national payment associations are trying to modernize the systems. The whole notion of collaboration and innovation within payment systems, I think one of the interesting thing about payment systems is that as a network, it requires collaboration between the public and the private sector, between central banks, regulators, the banking industry, and non-banking stakeholders. And in particular, I have an interest in fast payment implementation. So obviously, given my background with New Payments Platform, but as well, I'm very involved here in looking at fast payments implementations here in Canada. So we're currently undergoing a bit of an assessment process, looking at some of the options for Canada to develop its own fast payments capability. Interestingly, supposedly developed economies like Canada and even the United States lag a little bit in some of these developments. We've relied very heavily on legacy payment systems, and which, in some ways is interesting because it provides a platform for innovators. If you look at the United States, it means that some of the problems with check or electronic banking in the U.S. has provided a great opportunity for fintechs and to try to innovate around the edges. But yeah, I think again, you can never say, and I'll talk a little bit about this later, that we can never truly expect, at least in our lifetime, for those traditional banking-based payment systems to go away. They'll be with us, I believe, at least for my lifetime. I can't see them being fully supplanted by mobile, blockchain, or other types of fintech-based payments offerings, at least not for the foreseeable future. That's just a personal view, but these things are pretty well established, particularly in markets, like Canada, North America, Australia, and Europe. So it could be a different case in the rest of the world. Obviously, there's a bit of leapfrogging there, and there's not as much of an embedded base, but we'll talk a little bit about that as we work our way through the presentation. So as I mentioned, and I won't spend too much time on this, really trying to develop some key definitions, processes, talk about the actors and the roles, and then try to wrap up with some key issues, particularly for policymakers. As I said, I'm focusing really on sort of traditional bank-based payment systems. There's a lot happening in the payment space generally, in the digital financial services space generally, as we said, with mobile money, with the blockchain, distributed ledger technology. Those are going to be things that are going to be addressed in later webinars. So I'm not going to really be addressing that. I'm really talking about, I guess, basically the established legacy-based payment system. So the role of money. So we'll get into it now. So going back to, for those of you who remember Economics 101, and for me that was a long time ago now, money has a number of roles that it plays in the economy. I had a nice cartoon there of Scrooge McDuck sort of skiing down a mountain of money, but I think I lost it along the way in one of the versions of this slide. So money has a number of roles. So, and again, this is Economics 101. So it's a store of value. It is a way in which value can be actually retained. It is a unit of measurement, so it allows you to basically assess the value of things. And lastly, it's a medium of exchange. So again, these are the three roles that money normally plays. Again, this is sort of Economics 101. And it's that medium of exchange which is probably the most relevant to payment systems. It's a store of value as well to a degree, but really payment systems in and of themselves are about the exchange of value between economic parties. And those are some of the key concepts I really want to get down. It's about exchanging the value and the data between economic actors and allowing that to be done effectively, even where those economic actors may hold their value in different organizations. So allowing me to pay a counterparty who, for instance, may have a bank account at another bank. And that's really what payment systems fundamentally do. It allows the transmission of that value and data between economic actors, but also between actors that may choose to hold their value in different organizations. So why are payments and payment systems important? As I said, they connect economic actors. They connect individuals, businesses, small and big businesses, government, community, organizations, and so forth, and allow them to pay and be paid, to allow them to purchase goods and services, to remit money, and to provide benefits, and pay wages and suppliers. So all of these activities take place within the payment system. So I think one of the important things to realize is that payments is more than just what we would call retail payments. So the point of sale payment that would involve an individual paying a merchant, yeah, that is part of payments, but if you see payments as just being about me going to a point of sale and buying a newspaper or an apple from a merchant and using either my phone or my card or paying by cash, then I think you're really just seeing the tip of the iceberg. A lot of what happens in the payment system is a lot more sort of significant than that in terms of the volumes and the values. So for the business-to-business space, in terms of government payments, that's where a lot of the activity actually is happening. So it's important not to just focus on that retail space. Sure, that's probably the most obvious, but like I said, that's kind of the tip of the iceberg. So payment systems in and of themselves create efficiency and network effects. So thinking about the network is really important. Again, this is kind of, economics 101. So payments systems work well because they create networks. And as we all know, networks are part of what creates value. There's no value in me having a single telephone. That doesn't allow me to make or receive a phone call. But if I'm able to call Jason or Leon or Michael, then that's great. If I'm able to call all of you, or if I'm able to call 5 million or 50 million or 5 billion people, then that creates additional value in the network of me having a telephone. Same thing with payment systems. My ability to pay and to be paid by other economic parties increases the value of that network. So you want to have as many nodes, as many participants in that network as possible. And that's where you get the real values out of payment systems. Payment systems can remove friction and manage risk. Talk a little bit about that later. They provide an opportunity for fostering innovation and promoting financial inclusion. Again, payment systems or traditional payment systems have a mixed track record on this. I think many in the fintech or challenger bank or distributed ledger community, have levied or have put criticisms at bank-based payment systems because of their ability to access them. So, and access is a clear challenge, and banks have created payment systems quite often for themselves, and they've not really thought about how they can provide value for others. So, and lastly, payment systems can support monetary policy, and that's one of the reasons why central banks are very interested in them, particularly for high value payment systems. So a few definitions, and I said the Bank for International Settlements. Sorry, there's a missing S there. I apologize. It is the Bank for International Settlements. So a payment is a transfer of a monetary claim on a party acceptable to the payee. So typically claims take the form of cash or deposit balances held at a financial institution or a central bank. Again, this is kind of a core or legacy payment system definition of what we mean by payments. So again, it's actually the transfer of the monetary claim, the movement of the value and the data between the participating financial institutions and effectively between their customers, the end users. And I'll talk a little bit about that because quite often when we talk about who uses payment systems, some of the language can get a little bit fuzzy. And I think using the Bank for International Settlements definitions of this actually help provide a bit of clarity about who actually participates in payment systems and who is an end user of payment systems. And those are the terms that I like to use now, and I think they provide a little bit of clarity, and I'll be defining those a little bit as we work our way through this deck. So as I mentioned already, payments involve the transmission of value, so of monetary value, but they also involve the transmission of data, and data is becoming increasingly important. So when I exchange, it might be a check, it might be an electronic payment, it might even be a card-based payment. Again, I'm talking about sort of traditional payment systems. I'm not only transmitting the value to that counterparty, but I'm also actually providing them with data. So by the mere act of stapling an invoice to a check or providing some kind of remittance statement, then I'm providing some kind of data. Historically, that data has been provided for reconciliation purposes. So when I'm actually making a payment to the counterparty, they're able to then say, okay, Brad owes $200 on his electricity bill or his gas bill, and therefore I can then, put that against Brad's account. But increasingly, we're seeing data in and of itself being seen as an asset, and a lot of the excitement around the traditional or legacy payment system is the actual sheer volume of data that's flowing through those systems and the ability to analyze and understand that data and to get insights both in terms of economic activity, but also in terms of how people spend and how they consume. So it does give you some really interesting insights. There's a lot of really good information out there, and I won't spend too much time on that because I'll get distracted and I'll go over my 45-50 minutes. So generally, there's an instrument or form factor involved, and these are again terms that are used. So that could be a check, card, electronic payment, and payments are also categorized quite often as retail or wholesale. Some of these definitions are starting to blur, and I'll talk a little bit about this. So historically, we talk about retail payment systems effectively being low value and high volume. So card-based systems are generally seen as retail, and then wholesale systems are those where there might be a payment system that is more high value and low volume, and generally involves either financial institutions, banks, or large corporates, and don't necessarily involve individual consumers or smaller businesses. So that's another way in which payment systems often get defined or categorized. So now we get to a definition of a payment system. So a payment is actually the transmission of the value between the economic parties. The payment system is, as we define, using the Bank for International Settlements definition, a set of instruments, procedures, and rules for the transfer of funds between or among participants. And the system includes that participants and the entity operating the arrangement. Participants is a very good term, and participants for core legacy traditional payment systems generally means banks. It means financial institutions. And that's the important thing to realize, is that these systems generally involve banks as the participants in those systems. I might use that system as an end user, but I generally have to go through my bank to be able to effectively access that system. So we'll talk a little bit about that, but I think talking about end users and participants using those Bank for International Settlement definitions is very useful, because it allows you to have, I think, it allows you to clear up some of the kind of obvious confusion that can happen early on when you're talking about payment systems and you talk about users of payment systems. So we've got here a slide that talks a little bit about the actors in the system. So starting on the left-hand side of the screen, we have the payor, who's an end user. That could be an individual, that could be a business, that could be government, that could be anyone who wants to make a payment. And in this example, we're talking about probably like a credit transfer, right? Where I'm, say, I'm the payor and I'm paying, say, Leon $20 because I owe him for lunch, right? So I'm not sure whether or not you can, if I've got this little thing. So, oh, look, I can do things here. This is really cool, okay? We'll just keep on the slide here. So the payor end user on the left-hand side is the individual who initiates the payment. Again, there's debit pulls and all this stuff, and I won't get too much into that at this point because, again, that's probably another discussion for another time. But generally, a credit push is a payment where the payor sends the payment to the payee. It sort of follows that path on that slide there, where debit pull is where the payor actually is pulling the money out of the individual's account. So that's a very simple way of describing that. So the payor will initiate a payment through their commercial bank, who is a participant in that system. That commercial bank will then generally generate a payment message, which they will then send to the payment system, which is in the middle, which is those connection of computers there. Then, as through the process of exchange and clearing, and then settlement, generally, quite often in central bank dollars, the payment message is sent to the recipient bank, to the commercial bank at the other end, and then the payee, the end user, their account is credited. And then they're able to access that money. So again, this is highly simplistic. I mean, payment systems are obviously generally more complicated than that. But again, I wanted to show this at a very basic level to make people understand that the banks quite often are separate entities from the payers and the payees, and that they are separate quite often from the payment systems increasingly. So the banks have historically controlled these systems, but that is becoming less the case, and payment systems are becoming more and more competitive with each other, and are becoming much more distinct. Just simply looking at someone like Visa and MasterCard. So 15 years ago, they were effectively bank-owned entities. Now they're independent, they're publicly listed organizations. They provide services to banks, but they're far more distinct in terms of how they're owned and operated. So payment systems are becoming far more separate entities. They're becoming far more than their own, their own sort of set of activities than just being adjuncts to stuff that banks do. You notice here in my diagram as well that I've got the central bank at the bottom, and quite often settlement, and I'll talk a little bit about what I mean by settlement, happens at the central bank. And then at the top, I've got a little diagram there to talk about government and regulators. And increasingly, payment systems, core, legacy, traditional payment systems are being regulated by government. So I'll talk a little bit about that, and that's one of the challenges going forward. So a little bit out of sequence here, but again, talking a bit about end users. So I like to talk about participants, and I like to talk about end users. So I think those are good definitions to use, and I would recommend you using that terminology when you're trying to make the distinction between, say, a bank that participates in a payment system and an end user who actually is someone who uses that instrument. So an end user is a customer of a financial institution or payment institution to which the financial institution or payment institution provides payment instruments and services to facilitate the completion of its transactions. And as I noted, that's very broad. Individual consumers, businesses, governments, and other entities. So good definitions to use. Bank for International Settlements has a glossary on their website. I would highly recommend that if you're working on definitions that you use that is a very good source because it's very well developed. It is very kind of developed country central bank focused. It isn't always going to provide you the best definition, but it's always, I think, a good place to start. So I would highly recommend the BIS there for that. Oh, just trying to move this. Here we go. So I'll talk a little bit about the role of each of the actors. So, commercial banks operate in most countries. So they might be privately owned, they might be owned by government, but quite often these traditional payment systems involve commercial banks that provide deposit taking and credit provision activities and payment services to consumers and businesses. As I mentioned, the value that payment systems provide is they allow value to be exchanged between the accounts of different banks. So I can pay Leon even though I'm a customer at Bank A and Leon is a customer at Bank B. That is a lot of the value that a payment system provides. It allows us to do that. And banks, I know banks are not necessarily the most favored institution, have been critical in developing and maintaining these payment systems. So these systems have quite often been created by banks. So banks have offered these instruments and then have identified that there was value in terms of allowing their customers to pay customers at other banks. So you go back to the 18th and 19th century and you've got the check clearing houses in places like London and New York, and you've got people like Jevons and other economists who do some quite interesting, looked at that quite a bit. It's very interesting that a lot of the concepts are the same, that effectively you're bringing together a series of banks, you're allowing them to exchange effectively messages, in this instance paper checks, and allowing them to both create efficiencies for themselves, but also to create value for their customers in terms of allowing them to pay counterparties that may be at another bank. So that's really, as I said, that's part of the value that payment systems provide. I'm just keeping an eye on the time here. We're at 7 a.m. Eastern North American time, so I think I'm okay. So the role for central banks and regulators. So central banks often play a very important role in these payment systems. So central banks increasingly issue currency. They've been doing that for many, many years. So paper notes, still an important part of sort of traditional payments. They may operate certain payments infrastructure. Quite often they operate high value systems. They might also provide other types of services such as holding collateral and the like. Central banks also provide banking services to government in many instances, and increasingly they regulate payment systems. So not always, but quite often central banks have a mandate to provide oversight of payment systems. Historically, or at least over the past sort of 15 years, that's been looking at the systemic risk associated with payment systems and designating those systems and ensuring that they adhere to international standards, the principles for financial market infrastructures. But increasingly, central banks have an interest in retail payment systems. I have 10 minutes remaining. Okay, I've got to move on here a little bit. So, central banks do not provide retail payment systems. So that's basically right. They provide services to banks who then provide services, or payment systems that then provide services to end users. We have other public regulators that may license payment systems or may involve in consumer protection issues. So the key activities in the payment system, and again, I'll try to get through this reasonably quickly because I've only got about 10 minutes left before we move to Q&A. So the exchange is the exchange of a payment message between participants. Clearing is the process of reconciling those transactions. And then settlement is the discharge of monetary obligations. So banks will exchange messages through a payment system. The payment system will generally reconcile those transactions. It might maintain some kind of ledger and maintain positions, and then those positions are then discharged through the process of settlement. So again, basic definitions from the Bank for International Settlement, but again, simple concepts, but it's important to be clear on what we mean by each of those. I'll talk very briefly about the two forms of settlement. As I said, if you're in the payment space, this is not advancing for me. Oh, here we go. Sorry, I apologize. I've jumped around a bit. Okay, deferred net settlement. So there's two forms of settlement. Deferred net settlement is, or DNS, is where individual transactions are netted by the system throughout the day, and then settlement occurs at the end of a predefined cycle. So that might be something like the end of the banking day. This is quite commonly seen in older style retail and bank payment systems. Fast payment implementations are trying to address this. But they provide netting efficiencies to participants, but obviously they introduce risks. So one bank might be long, the other one might be short, and so the one that's in a short position, if it fails overnight, for instance, then that exposes the other banks to to that risk. So to address that, increasingly high value systems have moved to real-time gross settlement, and that means that settlement for the monetary obligations between the financial institutions are actually extinguished on a transaction-by-transaction basis. It's most common in larger value systems. It's less liquidity efficient and more operationally demanding, but it extinguishes that credit risk between the participants. So payment system roles. Payment systems in and of themselves will often, in a sense, going back to our diagram where we had those computers connected together, they might have brand, technology, and rules. So that's sort of the way that I kind of split them up a little bit, and a good way to think about what the systems themselves actually do. So payment systems almost always have rules, even if they don't provide technology or a brand. So they'll have rules covering governance, access, so who can participate, how decisions are made, the exchange, clearing, and settlement processes that I talked about. So the message formats, when does clearing happen, when does settlement happen, dispute resolution, and the like. So that's a very important thing that payment systems do, and quite often they have very voluminous and very technical rules and technical standards. So. Payment systems also quite often will provide technology and processing. So they may provide a physical network, so that might be IP-based, that might be an X25 line, whatever. So it connects those participants physically with some kind of hardware, software, and wires, basically. There might be a message switch at the middle, which allows for the messages to be exchanged. So rather than Bank A sending a message directly to Bank B, Bank A sends it to the message switch, which is run by the system, which then forwards it to Bank B or C or D. And that switch then creates some efficiencies in terms of the processing of those messages. And then as well, payment systems will support clearing and settlement. It'll maintain positions, it will ensure that settlement occurs with the central bank and so forth. And lastly, increasingly payment systems might have a brand, or they might have commercial arrangements. This is quite common for our friends at Visa, MasterCard, the international card schemes. They may govern pricing, they may govern the customer experience, they might deal with things like chargebacks and fraud. So, the introduction of certain types of technology like EMV. Again, quite often, and there might, in some ways, and I'll just sort of jump to the next two slides. Historically, sort of your legacy payment systems like your check systems or your bulk payment systems run by national payment associations would just be rules and technology. They wouldn't have a jazzy brand, or they wouldn't really define the customer experience that much. That would be up to the bank. But the payment systems, your Visas and MasterCards, your credit and even your national debit card schemes are more likely to have a brand or commercial arrangements that sit on top of the technology and the rules. So again, payment systems can come in different flavors. So, and again, there's a lot of classification that goes on. I think I've covered most of this. just briefly, open and closed loop. I don't want to spend too much time on this because I've only got about 5 minutes before I have to get to the Q&A. But a lot of the lines are blurring between wholesale, retail, card-based. So the fact that you can use your credit card online, that means that some of those distinctions are increasingly blurring. Open loop and closed loop, a lot of the bank-based payment systems are open loop. So that basically means that it allows multiple participants, multiple FIs to participate in that system. So I can be at Bank A and Leon can be at Bank B and Jason can be at Bank C, and I can pay each of them through this payment system. A closed loop basically would require myself, Jason, and Leon to all be customers of that payment system. So we would all have to have, say, a PayPal account, for instance, if you want to define PayPal in a jurisdiction as being closed loop, which it is in some jurisdictions. So, but like I said, these lines are increasingly blurring between what is open loop and what's closed loop. And I think as we get the level 1 guys in for one of the later webinars, that we'll explore some of those. Some of the other webinars will explore some of those issues. Okay, now some emerging issues. I think I have about 1 minute per slide now. We have seen a lot of changes in payments over the past 10 to 15 years. I think PayPal, which was established in 1998, was an important milestone. We've seen the emergence of mobile payments, particularly in East Africa, and most notably, I think M-Pesa in Kenya has been touted as a success story. But mobile payments there's hundreds of deployments out there now, and it's definitely an area of great activity. There's a whole fintech environment that's arising, people trying to challenge sort of the traditional bank-based payment model with new ways of doing this. And then, the excitement around Bitcoin, blockchain, and distributed ledger technology. I don't really have time to go into that in detail. I know that there's going to be other sessions talking about that in more detail, but I just thought I would kind of lay out, the space in an introductory sense. Interoperability. This is a slide from the International Telecommunications Union. Excuse me. So if you look at the bottom left-hand corner, you've got something where sort of a situation, kind of a state of nature, where you might have, and PSI in this diagram means payment system infrastructure. So, for our purposes, payment systems. And the bottom left-hand corner diagram is where you might have multiple payment systems that don't interoperate with each other. So, some banks might participate in A, and different banks might participate in B, and other banks might participate in C, but they don't interoperate. And, in some jurisdictions, you go in and you see the multiple POS devices sitting on the counter of the merchant. That's quite often where you don't have that interoperability. You can develop new forms. You can develop interoperability, so bilateral interoperability, which is the top left, where those systems connect with each other. The top right-hand corner, where they all might process through some form of central hub, or the bottom right-hand corner, where you might have a single solution provided potentially by, say, a central bank or by a national payments association. So interoperability can be a challenge because, as I say, quite often these systems emerge organically and are developed by banks. But important, as I say, the value of payment systems is allowing counterparties to pay regardless of where they hold that value. So connecting banks with other banks is what payment systems have done well. I think that, if we look at what in the DFS space with mobile payments and what the Gates Foundation guys are talking about level 1, that can we do that in the emerging areas, say mobile payments and the like, so that we get away from everyone trying to control their own walled garden, basically. I'm pretty well at time, but I just need to get through a couple of slides really quickly here. So card schemes, very active. Our friends at Visa and MasterCard and American Express are very active in a lot of different jurisdictions. It can be quite political, primarily because of the fees that these card schemes or the banks who are acquiring their transactions charge merchants, and it's quite controversial and quite often leads to regulation. As I said, I was in Australia for 8 years, and the central bank there regulates interchange fees that the card schemes effectively levy on merchants and are collected by the banks. So. And one of the reasons why merchants are quite excited about new forms of payments is because of the cost they feel that they incur through accepting credit card payments. Faster payments, again, an area I'm very interested in. We're seeing bank-based fast payments, which allows immediate 24/7, 365 account-to-account payments. There's a number of implementations. UK Faster Payments was introduced in 2008 and was a very kind of important thing, and now we've got a lot of different jurisdictions, and I've listed a few of them there, where they are implementing fast payment solutions, which allow me to do that through effectively an account-to-account type system. So, and we're looking at that in Canada at the moment. I think I'm in the home stretch here. Inclusion. So even though there's a lot of talk about mobile payments, you know, we have seen a real dramatic growth in inclusion in terms of the World Bank Index collected some data, and they published it about a year or so ago, that 62% of adults in the world have a payment account, which was up from 51% in 2011. So we've seen a dramatic growth of people being able to have either a bank-based or a mobile-based account. Mobile money is definitely growing most dramatically in sub-Saharan Africa, where 12% of adults have a mobile money account. And of those, of that 12%, 45%, about half of those only have a mobile money account. So mobile money is definitely very strong in some regions, particularly sub-Saharan Africa. But bank-based payment systems are probably more established in places like Europe and North America. So we do see some strong regional differences. Lastly, the criticism of cash. Ken Rogoff, sort of a noted economist, produced a book last year, Curse of Cash, which I just finished reading. It's a good read, even though he spends a lot of time talking about monetary policy. And he really does sort of lay into cash, that cash supports the black or illegal economy, including the gray economy. So both crime and tax avoidance. It's inefficient and it's costly, and that it hinders the ability of central banks to carry out their monetary policy because effectively they can't introduce negative interest rates. So it's a good read. It's I think if you're interested in the payment side of it, you might only want to read the first half of the book. The second half is about monetary policy and negative interest rates, which is interesting, but not as relevant for us. But if you see it in your local library, it's definitely worth a read. And then lastly, national payment strategies. I think I'm giving myself 10 minutes for Q&A. I apologize for cutting into Q&A time a bit. But increasingly, countries, and a lot of countries have their national strategies. And that's important because it identifies that payments are a network and that they require coordination between multiple parties, central banks, regulators, payment system operators, banks, and non-bank participants. So, and importantly, end user representatives as well. So I think there's a lot of work happening on that, and that's quite good, quite interesting, and definitely an area that I'm very interested in terms of developing. I think I've given us about 21 minutes for Q&A. Thank you very much, everyone, for joining in on today. I hope you found that interesting and useful.